Hi class, a pleasant day to all of you again, and this is the continuation of our discussion on the distribution of profit or loss, and we are already in lecture video number 2. You need to watch this lecture video for the illustrations of agreements 1 and 2 on the distribution of profit or loss. Let us recall again the agreements in the distribution of profit. So I am referring 1 and 2 as number one, equally agreed ratio or any agreed ratio, and number two, based on partner's capital. And we have already learned that there are four options. The first one is based on original capital contribution. The second one is based on capital balances beginning of year. And the third is capital balances end of year. And the last and fourth option is based on average capital. Okay? And the rest of the agreements are numbers 3 to 6. In this video, we are going to illustrate 1 and 2. Okay, class? Let us move on. And this is our given. The partnership of Medina and De Toya generated a profit of 300,000. So in this case, the agreement that we are going to use is based on equally agreed ratio. So an equally agreed ratio would mean 1:1 or one half, one half for Medina and one half for De Toya, or 50% for Medina and 50% for De Toya. So if we are going to distribute this, it's very simple. Our entry to record the share and profit, we debit income and expense summary of 300,000 and credit Medina drawing 150,000 and De Toya drawing 150,000. So they have to share equally, okay? Because that's the agreement. And the next one is based on agreed ratio. Okay, we will assume that the agreed ratio is 4 is to 6. So in a fraction, it will be 4 over 10 or 6 over 10. They are the same. Or it can be 40% and 60%. Okay, so for this situation, we are going to distribute 40% to Medina, 40% times 300,000, and for the Toya, 60% of 300,000. So the distribution will be debit and income and expense summary of 300,000 and credit Medina drawing 120,000 and the Toya drawing 180,000. Okay? Now class, we are now going to discuss based on partners capital, and this is what we are going to use to illustrate this. So given Medina and the Toya partnership started on August 14, 2018. Medina and De Toya invested 300,000 and 700,000 respectively as initial capital contributions. So when Medina and De Toya started the business, Medina invested 300,000 and De Toya invested 700,000. Okay? On October 2018, Medina and De Toya invested additional capital of 100,000 each. So Medina invested an additional of 100,000 and De Toya likewise invested 100,000. On 2019, the following capital transactions occurred. Medina invested 100,000 on April 1st. Okay, so there is an additional investment from Medina. De Toya, however, made a permanent capital withdrawal of 50,000 on July 1st. Okay. Partnership contract provides that effective January 1st, 2019, each partner may withdraw 5,000 each month and both partners did so. Okay? So that is the additional information. The partnership generated a profit of 300,000 for the year 2019. So what is required is distribute the profit of 300,000 for 2019. Okay, class? First, let us perform an analysis of the given data. Okay? And let us use the T account in performing the analysis. So we are going to structure the partnership equity for 2019 for Medina and De Toya with respect to their capital and drawing. So Medina's capital, this is 2019. So on January 1st, how much Medina's capital is? So if we are going to look back on what we're given, 2018, 300,000. However, there's an additional of 100,000. So for 2019 of January 1st, then Medina has 400,000. Okay? And on April 1st, there is, let us take a look first of the Toya, by the way. So the Toya on January 1st, Detoya invested on August 14 700,000 and made an additional investment of 100,000 on October 2018. So in the beginning of 2019, on January 1st, Detoya will have 800,000. So now, for the additional information, on 2019, Medina invested 100,000 so on April 1st. So on April 1st, there is an additional 100,000. Okay? So and since that there are no more transactions, okay, let us take a look what will be the ending capital for 2019 for Medina. On December 31st, then Medina has 500,000. For the Toya, okay, it will be a withdrawal, capital withdrawal of 50,000 on July 1st. So, capital withdrawal is a reduction of the capital in the amount of 50,000. So, the Toya on December 31st has a balance of 750,000. Okay, there is an information here that partnership contract provides that effective January 1st, 2019, each partner may withdraw 5,000 each month, and both partners did so. So let us take a look of the withdrawal, and that withdrawal is reflected in the drawing account of Medina and De Toya. So on January 1st to December, there will be 5,000 for each month. So the total of that 5,000 for 12 months will be 60,000. So that is the withdrawal made by Medina. And similarly, Ditoya also made a 5,000 withdrawal per month. So there will be a drawing of Ditoya as well of 5,000 each month. So the total of that from January to December is 60,000. Okay. Let us now take a look of this, the profit. The profit will be reflected in the income and expense summary. Okay, after doing the closing, there will be a balance of 300,000 as credit in the income and expense summary because it is a profit. Okay, so the requirement is distribute the profit of 300,000 for 2019. Okay, so this is what we have. Take note of this because we will be needing this information in the succeeding slides. Okay, okay, class, let us move on. Now, we are going to continue based on partners' capital. And at this illustration, we are going to illustrate the original capital contributions. So if we will be looking at the given, the original capital was on August 14, 2018. Okay? And on this, they have this capital structure on August 14. Okay? So Medina has 300,000 and Detoya has 700,000. So if we are going to distribute the 300,000 for 2019, we are going to use the uh, original capital contribution because the agreement, I mean, the illustration here is based on original capital contribution. So let us distribute the profit of 300,000 to Medina and De Toya using the original capital contributions. So their original capital contribution are 300,000 for Medina and De Toya 700,000 for a total of 1 million. Now let us do the distribution. So the distribution will be the ratio, okay, is 3 is to 7, okay, based on original capital, okay? Or it can be, we can use a fraction, as I've said, you can use 310 or 710 or a percentage, which is 30% and 70%. So let us use the percentage, 30% of 300,000. So the profit of 300,000 multiplied by 30%, you will get the share on profit of 90,000. Then 70% of 300, that will be 210,000. So if we are going now to do our entry, we will we will debit the income and expense summary of 300,000 and credit the share of the partners, okay? 90,000 for Medina and De Toya 210,000 in the respective drawing account. So this will be our entry in the distribution of profit for 2019 in the amount of 300,000. Okay? Let us move on. Now, let us now discuss or illustrate based on partners' capital, but using capital contributions beginning of year. We have done already illustrating the capital contributions, okay, for 2019. So in the beginning of year, we can note that Medina has 400,000 and De Toya has 800,000. Take note, class, beginning of year. So we are going to use the capital on January 1st. Okay, so the capital balance beginning of year for Medina and De Toya are 400,000 and 800,000 respectively for a total of 1.2 million. So the distribution will be if we are going to use the proportion 4 is to 8, or in fraction that's 1/3 and 2/3, or in percentage 33% and 67%. Okay, so now 33% of the profit of 300,000, we are going to distribute it 33 of 300,000, that will be 100,000, and 67% of 300,000, that's 200,000. So the entry is debit income and expense summary of 300,000 and credit Medina drawing 100,000 and De Toya drawing 200,000. Okay? And now, class, let us discuss now the third option, which is capital contributions end of year. So for 2019, let us take a look again of the capital accounts of Medina and De Toya for 2019. So here, end of year, so their capital balances are for Medina 500,000 and for De Toya 750,000. So let us do the distribution for Medina and De Toya based on their capital contributions end of year. So Medina has 500,000 and De Toya has 750,000 for a total of 1,250,000. So the distribution ratio is 5 is to 7.5, okay? Or you can express this in fraction, which is 5 over 12.5 or 7.5 over 12.5. And in percentage, just divide 5 by 12.5, you will get 40%. And for the Toya, it's 60%. So if we are distributing the profit of 300,000, so the share on profit, 40% of 300,000 for Medina and 60% of 300,000 for De Toya. So the entry will be income and expense summary debit of 300,000 and credit Medina drawing 120,000 and Ditoya drawing 180,000. Okay? And class, the last under based on partners' capital is average capital balances. So for 2019, this is what we have. So the first thing that we have to do is compute the average capital balances for 2019. We don't have that yet. We don't have that in the T account of Medina Capital and Ditoya. So we have to compute that based on the transactions on the capital. Okay, so let us compute that for Medina and for the Toya. So here, let us have first the beginning capital on January 1st. How much is the balance? So for Medina, Medina has 400,000 on January 1st. Okay? And then on April 1st, there is an additional 100,000. Okay? So class, for the Toya, on January 1st, there is 800,000. However, on July 1st, there is a withdrawal of 50,000. So these are the transactions that had occurred, okay, on Medina and Ditoya's capital. Okay, so let us now get the capital balances. Okay, so from January 1st, there is 400,000, but this 400,000 is only up to March 31st because on April 1st, there is an additional of 100,000. Okay, so this 400,000 is only from January 1st to March 31st. And April 1st, the capital balance is now 500,000. Okay, because 400,000 plus additional investment of 100. So starting April 1st, the capital balance is now at 500,000. Okay, to compute the average capital balances of Medina, we have to multiply that by the number of months wherein it is at 400,000. So the number of months is from January, February, and March. So that's 3 months. Okay? 3 months. And then we have to divide it by 12. So 400,000 times 3 divided by 12 will give you the average capital balance of 100,000. Similarly, we have to do that for 500,000. So this 500,000 was the balance from April up to December 31st. So that would be April up to December is 9 months. Okay, divided by 12. So it's 500,000 times 9 divided by 12 will give you 375,000. So you have to add the two. So adding it would have a total of 475,000. So that is your average capital balance for Medina. For the Toya, you have to do the same. So you have 800,000. This will be up to June 30 because there was a withdrawal on July 1st. So January to June 30, you have 800,000. Then on July 1st, there will be a reduction by 50,000. So the capital balances is 750,000. Okay? So 800,000, how many months of that? Up to June 30, that will be 6 months. So multiply 800,000 times 6 divided by 12, you will get the average capital balances of 400,000. And here, 750,000 times 6 divided by 12, you will get 375,000. So adding the two, so for the Toya, you have a capital average capital balances of 775,000. Okay? Now we are going to use this average capital balances in determining the ratio. Okay? So now we will distribute now using the average capital balances of Medina that we have calculated. Okay? So 475,000 for Medina and Detoya 775,000 for a total of 1,250,000. So the distribution, our ratio will be 4.75 is to 7.75, or in percentage 4.75 of 12.5 or 7.75 of 12.5, and doing converting that into fraction, you will have 38% and 62%. And we are distributing 300,000. So Medina's share is 38% of 300,000. That would be 114,000. And the Toya share is 62% of 300,000. That will be 186,000. So our entry, debit income and expense summary of 300,000, and then credit Medina drawing 114,000, and the Toya drawing 186,000. Okay? If you have questions, please let me know. And we are going to continue the discussion on the agreements in the distribution of profit. Okay, class, bye for now and hear me again on my next video.